Okay, all right. Today our discussion is IFRS 13, the fair value measurement, which is very important. And this is the 13 number of International Financial Reporting Standard, which is about the fair value measurement. First of all, these are two words: the fair value and its measurement. What is the fair value? In today's session, we are gonna understand the two words: fair value and its measurement in accounting standards. IFRS 13 defines fair value. I will explain fair value later on, sets out a framework for measuring fair value. We're talking about IFRS 13 and requires disclosures about fair value and measurements. Disclosures is actually shown in the notes to the accounts. Notes to the accounts is the statement of a financial statement. The fifth financial statement is the notes in which all the information about the fair value of the assets and liabilities are disclosed. It applies when another standard requires or permits fair value measurement or disclosure about fair value measurement and measurement based on the fair value, such as fair value less cost to sell. What is the fair value? I'm giving you one example and you would understand it very uh, in a better way. For example, I'm giving you offer to buy something. When you go to market and buy something, you first go and ask about the fair value of that thing. What is the fair value? If you have asset and that asset spent for you with you, for example, um, a vehicle you bought 2 years before, and now you are gonna sell it. So at the time of purchase, the cost of the vehicle was 10 million, and now the fair value of the market after 2 years is 5 million. So the 5 million is the depreciation. You have to cut that cost from your fair value. For example, 10 minus 5, so 5 is the fair value of that vehicle, which is a simple definition and simple explanation in simple words, except in specific circumstances in which other standards go on. For example, IFRS 13 does not specify the measurement and disclosure requirement for share-based payments, transactions, leases, or impairment of assets. As you know, that for impairment of assets and leases, we have separate standards. So in separate standards, I'm gonna explain this in next videos. Nor does it establish disclosure requirements for fair values related to employees benefits and retirement plans. Retirement plans and employee benefits is also explained in other standards and international financial reporting standards. These are also a separate standards. IFRS 13 defines fair value as the price that would be received to sell an asset or paid to transfer liability in an ordinary transaction between market participants at the time measurement date and exit price. What is mean by this paragraph? This paragraph is actually focusing on the selling of an asset. Whenever you sell your asset, you have to sell that asset on the measurement date. You have to measure the fair value on the date, the exit price, the exit date, the date when you are supposed to sell your asset. You have to consider the cost, the amount of selling at that specific date. Okay, when measuring fair value, an entity uses the assumptions. An entity, a company, AOP, association of person, or sole proprietorship, they assume that market participants would use when pricing the asset or liability under current market condition. What are the current market condition? It is also one of the basic concept of the decision making. Financial managers, financial analysts make decision in a very critical condition of business. Whenever they want to sell their assets, they focus on the market. What is the fair value of that particular asset? If they make a good financial decision, they get good benefit, good profit on their investment. If they make wrong decision, ineffective decisions, then they incur some cost and losses. As a result, an entity intention to hold an asset or the settle or otherwise fulfill a liability is not relevant when measuring fair value. A financial manager business analyst, CFO, CEO, chief executives. See and do analysis of the marketplace that they have some good margin by selling their assets or by maintaining their assets. They take decision with respect to that. Thank you for watching, and I inshallah will explain more in coming videos.